Welcome to Have an IPA with a CPA. We're here to share ideas to help you and your business make more money and keep more of the money you make. Hi, I'm Paul Mueller.
And I'm Robyn Pye. Paul and I are co-owners of Mueller Pye & Associates with offices in Northern Colorado and Katy, Texas.
Today's topic is about entity choices, which is an important topic for any person thinking of starting a new business.
Yeah, definitely.
But first,
let's talk about the beer.
Let's talk about beer. We're at Grimm Brothers Brewhouse in Loveland, Colorado. Grimm Brothers was the original first craft brewery in Loveland, Colorado. And today, because it's summertime, we're having Maiden's Kiss, which is a lemon radler.
All right, cheers. Let's try it out. Almost like lemonade.
With a little bit of kick.
It's delicious.
Yeah, that's great.
Yeah.
So Robyn, making an entity choice for a new business carries legal, tax, and registration requirements, and they're all different by state. So this is a big decision for people to make. We're not going to be able to cover all the considerations of all the various types of entities, but let's hit the high points of some of the most common type of entities.
So starting very basic, sole proprietorship. It's not an entity at all.
Okay. Yeah, it's an entity without being an entity.
Yes, so it's informal, unincorporated. There's no liability protection for the owners, and the profit is subject to the owner's to income tax on the owner's tax return, and also subject to self-employment tax at 15.3%.
That can be pretty expensive in terms of a tax bite. So I've had clients ask me when they're starting a new business, they have a perception that they have to be something, that they have to create an entity.
They don't.
But it sounds like with the sole proprietorship, they really don't need to, and they're still a valid business.
Yeah, absolutely. There's risk because they don't have liability protection, but it's a valid business, and they can certainly operate that way if they choose.
Very easy to get started.
Yeah. So so let's roll into partnerships.
Okay.
3 types of partnerships. A general partnership, which is informal and unincorporated. Does that sound familiar?
Sounds like maybe a couple of sole proprietors getting together.
So that's exactly what it is.
Okay.
Partners are personally liable, profits are taxed to the partners, and most likely subject to self-employment tax.
Which sounds very familiar to sole proprietorships.
Yeah.
Okay.
So then you have this thing called a limited liability partnership that
LLP.
Operates much like a general partnership. There is some limited liability protection for the partners. What we see typically with partnerships is a limited partnership.
Okay.
Generally, you would have one general partner, multiple limited partners. Those limited partners are not subject to liability of the entity.
Unless they become unlimited partners by being too actively involved in the business, so there's a risk.
That's right.
Too.
They can't participate in the management of the entity and still maintain that limited partner status.
So that would almost be what people call the silent investor.
Yeah.
Which, as we know, silent investors aren't always silent.
No, they're not. Right. No, they're not.
So what's next?
Okay, so the granddaddy, and that's the corporation. Corporation is formed under state law. Shareholders are not liable for the corporate debts unless you're a professional corporation and you're subject to some sort of malpractice suit.
So you can't escape that kind of liability.
Right.
That's like a personal act of negligence.
Right.
But for all other kind of liabilities, the owner should be shielded from that.
That's right. Federal tax treatment depends on C status or S status.
And the difference between those two?
Yeah, so a C corporation pays tax, flat rate, 21%, and then the shareholders are subject to another tax when that profit is distributed to them. So that's that double taxation that you hear about when people talk about corporations.
Right.
An S corporation is not subject to that double taxation, and generally they don't pay tax. So the federal income tax is paid by the shareholders on their individual.
On their share of the profit or loss.
On their share. And then you have the youngster, and that's the limited liability company. That's kind of the newest and most popular. It's a hybrid between a partnership in terms of flow through of the income and a corporation for purposes of liability protection.
So it's kind of the best of both worlds?
Yeah, relatively informal in that you don't have bylaws or a board of directors.
Minutes.
You don't have to.
Stock certificates.
Right.
None of that.
Now you should have an operating agreement. Any limited liability company needs an operating agreement.
Just so the owners know the rules of the road.
Yeah. For purposes of IRS treatment, if a limited liability company has one owner, then it's disregarded as an entity but you still have the liability protection. Yeah, at the state level. Absent an election, a multi-member LLC is taxed as a partnership. You can elect to be taxed as something else, but for default purposes, it's taxed as a partnership.
So if they could elect to be what?
An S corp. That's what we see the most. That's the most
really,
common.
So really, an LLC can kind of be anything it wants to be.
Yes.
Yeah, that's incredible flexibility.
A lot of flexibility. So I think that's why they're probably the most popular.
And you know, LLC started in Wyoming in 1977, the same year I started practicing. So I'm still a youngster.
There you go.
Okay.
And limited liability companies, I believe, are now recognized in all 50 states.
All 50 states, that's
okay.
right. It's pretty universal now.
Yeah.
Well, you know, each situation is unique. So this is just some high points, some little bit of guidance. Robyn and I hope you found this information useful. Be sure to send us an email with any comments, questions, or suggestions for future topics. Also check out our Have an IPA with a CPA YouTube channel for additional topics and ideas. And until next time,
Prost.